Welcome back to the Leadership and Strategy Mastery Hub. In our last video, we explored revenue, the lifeblood of any business. Today, we turn to its natural counterpart, cost. We will discuss what strategic leaders need to understand about cost. Cost may seem like a simple term, money you spend to run your business. But in strategic terms, cost is far more powerful. It's the foundation of pricing, the driver of profit, and the key to sustainable operations. Let's start with the basics. In business, cost refers to the amount of money a company spends to produce goods, deliver services, or run daily operations. It's everything you give up to make things happen. Raw materials, salaries, electricity, rent, software licenses, even the coffee in your office kitchen. If it keeps your business running, it's likely a cost. But to truly understand cost, we need to go deeper. Fixed costs are those that stay the same, no matter how much you produce or sell. Think rent, insurance, or salaried employees. Whether you sell one product or 10,000, these costs don't change. They're the baseline burden your business carries. Variable costs, on the other hand, change with output. The more you produce, the more you spend. Raw materials, packaging, electricity, hourly labor, these are variable. They're closely tied to scaling your business. Then we have direct costs, expenses that can be traced directly to a specific product or service. For example, if you run a bakery, the cost of flour and sugar is a direct cost. You wouldn't have it unless you were making that product. Indirect costs are a bit different. These support your business but aren't tied to a specific product. Think of things like office rent, administrative salaries, or software subscriptions. They're essential but spread across all activities. You can also look at costs from another angle. Operating costs are the day-to-day expenses to keep the business running. Non-operating costs, like interest payments or one-time legal expenses, aren't part of daily operations but still impact financial performance. So why does this matter? Because costs shape strategy. Cost influences pricing. If you don't understand your cost structure, how can you set a price that covers expenses and brings in profit? Cost affects profit margins. Reducing costs without sacrificing quality can directly boost profitability. Cost determines business models. Some businesses run on high fixed costs but scale easily, like software. Others rely on low fixed costs and flexible labor, like freelance services. Knowing your cost profile helps define your strategy. Cost also impacts competitive advantage. If you can produce at a lower cost than competitors, you can price more competitively or enjoy higher margins. That's the heart of a cost leadership strategy. Let's say you own a small cafe. Your fixed costs might include rent, furniture, licenses, and your full-time barista. Your variable costs would be coffee beans, milk, takeaway cups. Direct costs, everything involved in making the drinks. Indirect costs, accounting software, cleaning services, marketing. Now imagine your supplier increases the price of coffee beans. That's a variable cost increase. If you don't respond by adjusting prices, finding a new supplier, or optimizing waste, you lose margin. Understanding costs lets you stay ahead of these shifts. At the surface, cost may seem like a simple expense. But in the hands of a strategic leader, cost becomes a tool for efficiency, for pricing, for profitability, and for growth. So next time you think about cost, don't just ask, how much? Ask instead, what kind of cost is this? How does it scale? And how does it shape the strategy of my business? Enjoyed what you saw? Hit that subscribe button and like this video to join our community and never miss out on new content.